Hey, Charlie Mattingly here with Leading Edge Financial Planning again today, just to talk a little bit about some behavioral biases that we have. One of them is very interesting, and we study behavioral finance, behavioral economics all the time. We think it's super fascinating and has a huge impact on our investments, investment returns, even, in our savings habits and our success in retirement. Another one of the things that it affects tremendously, believe it or not, is taxes. So, how does taxes drive our behavior? First, let me talk about behavioral biases. What am I talking about there? But basically, we know that our brains are not wired for some types of finances, like the stock market. Our brains are basically wired to save our lives in a car wreck or whatever. Think quick, and sometimes your emotional thinking saves your life literally in stressful situations. That's what it's for. In fact, that's the limbic system. The limbic system is the emotional center and takes over under stress. The limbic system is the part of the brain involved in our behavioral and emotional responses, especially when it comes to behaviors we need for survival, feeding, reproduction, and caring for our young, and fight or flight responses. So one of the behavioral biases that we think about this time of year is the tax aversion bias, right? I think I just made that name up. I don't know, maybe it's out there, but I didn't say tax evasion, I said tax aversion. So what I wanted to talk about today was some of the weird things that we do as taxpayers to avoid paying taxes. Okay, there's nothing wrong with minimizing your taxes. We don't want to pay more, 1 cent more than we're legally required to do, but we also don't want to reduce our net worth just to avoid paying taxes. And that's in fact what happens a lot. Let me give you a quick story. My father-in-law owns a lake house here in the Knoxville, Tennessee area. Really beautiful place. Of course, it's paid off and it's appreciated significantly in value. Well, they don't want it anymore. It's a lot for them to take care of, so they should sell it, right? Well, he won't. He won't sell it because that means he's going to have to pay some taxes, some pretty significant taxes. And maybe there's some ways to avoid that or minimize that. But the point is, he won't sell it simply because we're going to have to pay 15% capital gains tax, possibly some depreciation recapture. But nonetheless, there's a significant amount of money there just sitting, in other words, to avoid paying some of that taxes. So that's an example of behavior or our tax aversion bias driving some of the behaviors. Let me see if I can share with you my screen real quick to show you another real interesting thing. We've talked about, or you've probably seen, the increase lately in these hard seltzers, right? So I found it fascinating on the Tax Foundation website here to learn that some of these hard seltzers are from or made because of tax reasons, or the way that they're made, I should say. Seltzers have found a way to make the beverage by fermenting rather than distilling sugar. And since it's brewed like beer, hard seltzer is taxed like it too, avoiding a relatively hefty distilled spirits excise tax in the U.S. So pretty interesting. But not only that, that's a more recent example. Check out these examples. Have you been to Charleston, South Carolina, and noticed that the buildings are narrow and close together? Well, that comes from back in the day when I think it started in Amsterdam and probably copied, that style was copied. And they made the buildings narrow because they were taxed, it looks like, on the width of the property's facade or how much street space they took up. So that's interesting. Another fascinating one is this, they call it a mansard style roof. I think I pronounced that right. So basically we're created rooms above the roof line because taxes were levied on the number of floors below the roof line. So for years and years, we've been influenced by taxes, and our behavior, again, is influenced significantly. In fact, one of the things I struggle with a lot or think about a lot is farm equipment. Boy, I'd like to buy a new tractor. And sometimes people towards the end of the year say, hey, I need to reduce my taxes. I'm going to go buy a tractor. Again, if you have a legitimate farm or it's a deductible expense, that's appropriate or that's legal, I should say. However, do we really need a tractor? Do we need that tractor? Or are we just buying a tractor in order to save taxes? So really what that equates to is spending a lot of money to save a little bit. In other words, let's say you spend $30,000 on a tractor and you're in the 24% tax bracket or marginal tax bracket. That's about a $6,000 savings. So you get a tractor at a discount, which is pretty nice. So you might save $6,000. In other words, you spend $30,000 on the tractor. Tax time rolls around, you're able to deduct that. Forget about depreciation, all that complicated stuff. Keeping the example simple is that, let's say that results in a $6,000 return, or less taxes that you have to pay. So essentially, you paid $24,000 for the tractor. Pretty good deal. But what if I didn't need the tractor? That still paid $24,000. What if I just took some money and invested it in a brokerage account or saved in my IRA with no tax deduction? Again, if you need the tractor, farm equipment, whatever, that's a different story. But don't do things simply because it's a tax savings. And as my business partner, Kevin Gormley, will tell you, that's the tax tail wagging the dog. So we see this behavior a lot. A couple other behaviors I'll talk about real quick. And these are really important because we need to make decisions, and tax smart decisions. One of those is, should we do Roth 401k or non-Roth 401k? Most of you listening to this cannot deduct anything in an IRA anymore. Your income is probably too high. But in your 401k, you have a choice. Do I pay those taxes now, or do I pay the taxes later? Sometimes we tell people, depending on the situation, age, etc., tax bracket, it's smarter to pay taxes now, possibly. So that's kind of painful. Hey, I got to pay more taxes now in the hope of possibly reducing my tax burden in retirement. We met with somebody the other day, and we were having lunch, and they said, I hate taxes. I will not pay taxes. Kind of made me think that I'm glad we're not doing their tax return, but that person's behavior was preventing them from profiting in the long term because they were so angry about paying taxes. I get it. We all have been there. We feel the same way, but that's just one example. We hear this a lot. I'm paying too much taxes. I'm in this higher tax bracket. I don't have enough deductions. I'm going to go buy some rental property to get more deductions. Well, there's nothing wrong with rental property. It can be a good investment, especially if you have some knowledge of your area, and the rental market in your areas can be very advantageous. But if you go out and buy a rental property and you're not excited about being a landlord, then you might need to think twice because, and I've been here, in fact, the pain is still pretty real to me. I just got rid of these a couple months ago, and I was excited to get rid of them. They were absolutely a tax deduction, but they were also a stress that I dealt with all the time. And by the way, we spent a lot of money. Air conditioners go out, roofs need to be replaced. That's real money. Now I did get to deduct some of those things on my taxes, but I just simply would rather not spend that money on a roof or an air conditioner, and certainly don't want to lose money on a rental just for a tax deduction. So again, there are good things about rentals, such as depreciation. It can be a good diversifier of your investments. And so think about it that way, but be ready, and never, 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 first of all, never go buy rental real estate just for a tax deduction. Don't ever do that. You'll regret it. And secondly, don't intentionally lose money on your rental just for a tax deduction. Now, if you want to, plow back in the savings back into the mortgage to pay it down, obviously can be a smart thing to do. But just wanted to end with that example. It's a common one that we see quite a bit. And our intention is to just help you to be aware that taxes is a very emotional issue, very emotional. Sometimes we let our emotions make decisions for us, such as the example where I'm not going to pay taxes no matter what, or as little as possible no matter what, when sometimes it might be smarter to pay that tax now, even though that's painful. So I hope that helps. Please reach out to us anytime at leadingedgeplanning.com. My email is charlie@leadingedgeplanning. We'd love to hear from you. Thank you very much.